examinations is for advances. Okay. Among advances, there are three main parameters that retail, MSME, and agriculture. And among all these three, like retail is the most easiest one to learn. And because most of the things that are like you are doing it in your office and branches, but at the same time, MSME is slightly difficult because of the vast syllabus that it has. And agree, as you know, most of the times it is like taken care by AEOs and all. So retail is comparatively very easy, and it will be very easy for you to score marks. That is like you should not miss any questions that is being asked from retail. So you always go for 100 out of 100. That is, whatever questions that is asked from retail, you should be in a position to answer all those. So we will be uh, straight away starting to the session. Before that, from the exam point of view, I would like to share you some tips on this. See, when you prepare for an exam like promotion exams, the first thing that you have to understand is the what are the type of questions that you are asked in for the examination, and at the same time what to study and what not to study. That is, what not to study is very important, because there are huge, it's like an ocean for us because of the manuals, the communications, circulars, everything. So what not to study, that you should have a basic understanding about it. So there are some few things that you should know, that what all things that you need not study. The first one is the rate of interest. Like you need not mug up all those rate of interest for each scheme or other things or whatever maybe. And the second thing is the processing charges. But off late, I have seen in some question papers, like there are some areas wherein it has been asked what is the fee charged, like questions that, but generally the processing charges part you can ignore. Okay. And the third one being the sanctioning authority parts and all. So there are some few exceptional questions that are being asked over very or the few last few years. But generally, if you speak, you need not study the what is the sanctioning powers of this particular sanctioning authority, and like questions like that. So those things you need not waste your time for examination point of view. I'm not telling in the general in your professional thing. From the examination point of view, you can very well ignore this. So I have prepared the this one material in such a way that you will be having a fair idea about how to approach the exam. So I will straight away start with the sharing of my PPT. So I think everyone is able to see my screen, right?
Yes, sir. We can see, sir.
Oh, okay, thank you. So we will start from the very beginning and very basic of the retail lending. Uh, See, as you all know, these are the points that I have mentioned is those which are asked in previous examinations, and the type of questions which I feel that is important from the examination point of view. Okay. As you all know, retail lending, the inward register name is NB 179. Those things that you have to see, but like over the last very few years, this question has find its place in the question exam papers in various cadres, like officer to manager or even clerical to officer, all those cadres, it has been asked. So NB 179 is the inward register for this one retail lending proposals. Anybody knows the full form of NB? You can probably put in a chat if it is enabled, or I will just. Yeah, it's not notebook, it is new book. Okay, yeah. So NB is new book 179 and NF is new form. Okay. And another thing that I would like to mention here is what is the statutory return that is used for reporting retail lending? Anybody knows what is the statutory return that is used for reporting this one? It is like uh, PSR 71. Okay. So PSR full form is it is uh, periodical statutory returns. Okay. That is PSR, and PRR is periodical review returns. Now coming to all the review part. See, as you all know, uh, each sanctioning authority has to like submit his sanction to the next higher authority. So there is a cutoff limit for retail lending. That is the if all sanctions to a borrower exceeding 5 lakhs, that is up to 5 lakhs, it is not required to be reviewed. So above 5 lakhs, it is to be reviewed by the next sanctioning authority. And in the case of SHGs, it is 6 lakhs. Okay, this is also one of the questions that are being asked over the last few years question papers. And the next important point is key fact statement. See, as you all know, key fact statement came into existence from 1st October 2024. So it's comparatively a new guideline that has come. So you last year it was introduced. So key fact statement is one of the most important things as far as retail, agricultural, and MSME is concerned. So from this part, you can expect one question maybe for like what is the validity of key fact statement? So it is valid for a period of at least 3 days for loans having tenor of 7 days or more, and valid for 1 working days for having loans or tenor less than 7 days. So this is one question here is what is the key fact when key fact statement was introduced maybe, but last year examination it was an important part that when from which date it is introduced, and the validity period is 3 working days for loans having tenor 7 days or more, and 1 day for less than 7 days. Now, coming to embargo. Embargo, as you all know, it is a restriction put on the sanctioning authority or the branch in general from sanctioning a particular product under their powers. So, the embargo on retail lending is 5% under any retail lending scheme. Okay, suppose if any branch is having NPA 5%, how it is calculated? It is calculated on the basis of NP under that particular scheme divided with the total outstanding loan under that particular scheme. So if it is above 5%, branches does not have powers to sanction any loans under that particular scheme. So the embargo is 5%. And in this, another important point with regard to embargo is who is empowered to lift this embargo? It is Circle Head CAC. Okay, so Circle Head CAC is having powers to lift the embargo on what basis? On quarterly basis. That is another important point. So if circle head feels that okay, this particular branch, the embargo needs to be lifted because there may be some peculiar reasons or particular reasons that because of which the branch is having such huge NPA. So a circle head can provide a waiver for embargo on a quarterly basis. Now, coming to this restructured, rescheduled. See, as you all know, risk weight is another important point. Maybe probably you will be uh, studying very uh, in depth regarding risk weight in the prudential exposure norms and prudential norms on income, IRAC norms. You all probably will be having one session, I think, on IRAC norms. In that, you will be studying much deeper about risk weight. So risk weight here from a retail lending point of view, it is a very, very important point. In the previous examination, there was so many questions asked with regard to risk weight part, that is LTV and risk weight part. So what is LTV? LTV is like, it is a loan to value ratio. It is with regard to a particular loan. So it is given by RBI. It is a mandated thing given by RBI. So in the case of housing loans, there are some norms put on by RBI with regard to LTV ratio. So if the housing loan is up to 30 lakhs, as you all know, the margin for housing loans up to 30 lakhs is 10 percentage. Okay. And the margin for housing loans up to 30 to 75 lakhs is 20 percentage, and it is above 75 percentage, that is 25 percentage. Okay. So up to 30 lakhs, 10 percentage means you can lend up to 90 percentage of the value of the property or value of the house or the property put together. So the RBI has given two types of risk weight with regard to housing loans up to 30 lakhs. See, up to 30 lakhs means the you can have a margin of maximum 10 percentage. If the margin is 10 percentage means the LTV will be 90 percentage, and the margin is 20 percentage means the LTV is 80 percentage. Okay. So if the margin or for loans up to 30 lakhs, if the LTV is less than or equal to 80, the risk weight is only 35 percentage. And it is between 80 and 90, the risk weight will be 50 percentage. So here what you have to understand is the LTV should not go beyond 90 percentage at any point of time. That is, the margin 10 percentage should be maintained for a housing loan of 30 lakhs at any point of time. So if you are going to have an LTV up to 90 percentage, that is 80 percentage to 90 percentage, the risk weight that you have to provide for is 50 percentage. So if you are having a margin of say 20 percentage, that is 80 percentage LTV, you will be required to keep a risk weight of only 35 percentage. And similarly, in the case of uh, 30 to 75, as you all know, the LTV ratio is okay. What impact does risk weight is having? See, the impact is risk weight is like based on it is more to do with the Basel norms. Okay. See, based on the our credit book, that is the loan book, we have to keep aside a capital. Okay. Each capital, that is, each loan is having an impact on our capital structure. Okay. So suppose if you are having a loan outstanding of say 25 lakhs, you need to have a particular amount of capital set aside for that one. Because tomorrow, if that loan goes bad, we need to have a cushion for uh, that particular loan. So RBI has mandated, this is based on the IRAC norms, okay, income recognition and asset classification norms. So for a standard loan of say 25 lakhs, you need to have a risk weight of say if the margin is up to 10 percentage, 50 percentage you need to set aside the capital. That is meant by this one, risk weighted assets. Okay, say in simple terms, if you put a 20, say 30 lakhs housing loan, okay, 30 lakhs housing loan with a margin of 10 percentage. So the risk weight will be 50 percentage. That is 30 lakhs loan, margin of 10 percentage, 50 percentage risk weight means 30 of 50 percentage 30 lakhs. That is 15 lakhs. That 15 lakhs capital you should set aside. That is mean by risk weight. I think you might have understood the concept very clearly. Okay, so higher the margin, the lesser the risk weight, the lesser the capital that we need to set aside. Okay, so what is key fact statement? Somebody has asked. Okay, key fact statement is essentially a document as mandated by RBI to be given to the borrower, which contains all the details regarding the charges, his repayment obligations, all those things related to that particular loan, apart from the sanction communication. So, key fact statement is one important document that we need to convey to the borrower. Okay, it was introduced from in our bank for retail lending from 1st October 2024. So we are it is mandatory for now. Okay, so loan to value ratio, as you all know, that it is the risk weight. Validity in what way means? Yeah, validity I will tell. See, suppose if you have given the loan on this particular day, you need not or you should not be like giving the key fact statement on a later date. That within that particular date from the loan, you need to convey the key fact statement to the borrower and get it acknowledged, because uh, it is like the charges may be differing on a later date. Okay, so within 3 days or 3 working days, the key fact statement should be communicated to the borrower. Now, what is risk weight and how to calculate risk weight? So, see, it is very simple. I will just explain with the one more example. Say, take the loan of 30 lakhs housing loan with a 10 percentage margin. The risk weight will be 50 percentage. As you all know from this particular table, the risk weight is 50 percentage. That means you need to have 15 lakhs of capital set aside for that particular. Okay. If the margin is 20 percentage, that is LTV is 80 percentage, you need to keep only 35 percentage of this 30 lakhs set aside as capital. That is what known as risk weight. Okay. And as you all know, and there is one more guideline, that is restructured or rescheduled housing loans shall attract additional risk weight of 25%. So that's why it is very important not to restructure the loans unless it is very much required. So if you restructure a loan, it will call for additional risk weight of 25%. So that is very it is from a bank's point of view, from a capital requirement point of view, it is not favorable or desirable to have additional risk weight, because we lose this much of capital to be set aside. Okay. Now, coming to the next topic, that is CRG rating. As you all know, CRG is Canara Retail Grade. That is the full form of CRG. So CRG rating model. See, this particular question has been asked in 2 to 3 examination, and 3 to 4 also. This, what is the score band of different ratings? So this you just need to have an idea. That is CRG rating, CRG prime, what is the scoring? If the borrower obtains above 95 score, he will be rated as CRG prime. If it is between 80 and 95, it is CRG 1, 70 and 80, it is CRG 2, 60 and 70, CRG 3, less than 60, it is CRG 4. So this table you need to by heart, because there has been questions asked in the previous exams. So just have a look at this and see, you have to approach this particular session in such a way that you should know, okay, what are the topics that I need to here have more importance from exam point of view. Like that, you need to approach this session, because I am not telling you, because these things you will be having time like to mug up on a later date. Okay, so just I am glancing through all those topics which are not requiring not deep explanation. So these are self-explanatory. Now, the next important point with regard to CRG prime, CRG rating is for which products the CRG prime is applicable. Okay, CRG prime is applicable only for Canara housing loans and vehicle loan four wheelers. Okay, for all the other CRG prime is not applicable. It starts from CRG 1 onwards. Okay, now the next important point is CRG rating is not applicable to for which all schemes. That is also very important, and questions have been asked in the previous examinations. That is Canara pension, education loan, gold loans, Canara four-wheeler loans to firms and companies, Canara rooftop solar, then housing loan for customers with minimal income proof, Canara Ready Cash, Canara Heal, Canara My Money, and Canara Insta mutual fund loan. So there are 11 products which are not requiring CRG rating. For them, we will be doing the rating based on risk grade. Here you can see CS1, CS2, CS3, CS4. Okay. Based on CIBIL score, we will be assigning the risk grade, and based on that, we will be proceeding. So CRG rating is not available. That you need to have an idea about these 11 schemes for which CRG rating is not applicable. From in this actually very important point is there because Canara Insta mutual fund loan and Canara housing loan to customer with minimal nil income proof is new products which are being introduced in 2025. So you need to have an additional understanding about these two products that we will be covering in this particular session. Now, coming to the most important point thing is that, as you all know, the bank has introduced cooling period and sacrifice amount concept in 2024 with regard to customers having return of status in their CIC scores. Okay. For the time being, I am not looking at the chat window because we will be short of our schedule, as somebody has pointed out correctly. So you can ask your doubts in the chat. At the end, I will be covering it together. Okay. So cooling period and sacrifice amount. It is like, see, till 2024, there were no guidelines with regard to how a customer who is having written off in their CSC score needs to be approached. Okay, so bank has come up with the guidelines in 2024, like what should be the cooling period and the sacrifice amount that is required to be considered while considering loans to customers who are having return of assets. So the sacrifice, if the sacrifice amount is up to 10%, the minimum calling period is 24 months. If it is above 10% to up to 25 percentage, it is the cooling period is 36 months, and above 25% it is 60 months. The sacrifice amount is also written there. How the sacrifice amount is to be calculated? It is percentage of book liability in our bank and outstanding in the case of other banks. Okay. That means if the customer return off is with our bank, it has to be considered. The sacrifice amount percentage has to be considered as a percentage of book liability. And if it is with other banks, it has to be considered as the percentage of sacrifice amount, that is the return of amount to the total outstanding. Okay, if it is up to 10%, the minimum calling period required is 24 months. If it is above 10% and up to 25%, it is 36 months. And if it is above 25%, it is 60 months. And the next point is comparatively a new guideline. That is, after the bank has introduced the cooling period circular, it was introduced. That is, if the return of accounts or the credit card receivables with the write-off amount up to 10,000, the cooling period is uniformly applicable, that is 24 months. Okay, there you need not go for the sacrifice amount percentage. Okay, that means if the return of account is or the credit card receivable write off amount is up to 10,000. Okay. Now, the coming to, I request those who are, I think it is by accident, you people are writing in the screen. Please don't do that because it is having some issues in the PPT. So, TAT is turnaround time. As you all know, bank has got turnaround time introduced for all the loans. So you need to have an idea on the what is the turnaround time introduced or stipulated by the bank for retail lending loans. Okay, this is as I said, this is one uh, slide which you need to mug up for from an examination point of view. I'll be sharing this PPT with all of you, so you can go through it on a later date. So as you all know, housing loans up to 25 lakhs, it is 21 days. The sanction is at branches or RHS. It is if it is circle, it is 30 days, and sanctions at HO, it is 6 to 8 weeks. Similarly, bank has got all the TAT stipulated for all the other products as well. That is above 25 lakhs, mortgage loans, Canara Jeevan loan, Canara vehicle, and Canara budget. Okay. Now, another important point with regard to this risk tier, that is also this particular thing is also introduced by bank very recently, that is in 2024. So we studied, that is based on CRG rating, we will be categorizing the borrower based on what is the risk rating. And we already said that 11 schemes are not to be considered for what CRG rating. So what is the guideline for those 11 scheme customers? That is what mentioned here. That is risk tiers of borrowers wherever CRG rating is not applicable. So if the CRG rating is not applicable, then the risk tier is near prime if their score is between 730 and 681. If it is score is between 300 and 680, the risk tier is subprime. You'll be knowing like CRG4 schemes, the sanctioning authority is not the respective sanctioning authority. It may have to go to the next tier authority or circle as the case may be, depending upon the proposal. So, what essentially this means is the RM wing has come up with a categorization for retail borrowers. That is, if the retail borrower is rated as CRG3, they are coming under risk tier of near prime. And if it is CRG4, then it is subprime. So, for the 11 schemes that we have mentioned there, CRG rating is not applicable. So, that means we need to categorize them also. For that, we rely on their CIC score. So 730 to 681 means they will be near prime, and 300 to 680, it is subprime. What you have to understand is if CRG rating is applicable, it is based on CRG rating, the risk tier calculation. And if it is not, CRG rating is not applicable, it is based on CIBIL score. Now, what is the importance of introducing this risk tier? Okay, that is, see, risk tier is essentially a risk mitigation tool as mandated by RBI. That means we cannot keep on giving loans to CRG4 borrowers or subprime borrowers. That means, suppose if we are giving loans, retail housing loans to 100 customers, if it is 40% of them is CRG4, it poses our bank in a threat with regard to creditworthiness of the borrower. So bank has introduced this risk tier. That means that is the next table, this particular table. This is what it is. Okay, that means near prime, the maximum ceiling as a percentage of retail loan sanctioned during the year is 10%. That means you cannot lend more than 10% of CRG3 borrowers in a particular year. And if it is CRG4, you cannot lend more than 5% in a particular year. That's the relevance of CRG prime and near prime and subprime. So what is the trigger limit? The trigger limit for near prime is 9%. That means once the near prime borrower percentage comes to 9%, a trigger will be initiated by RM. That is okay. Now we have to be cautious because the already 10% is the allotted quota for this particular year for near prime borrowers. We have already crossed 9%. So at 9%, the trigger will be enabled. And if it is CRG4, the maximum quota available is 55%, and at 4.5%, the trigger limit will be enabled. And in the case of CRG not applicable cases, that is as in the basis of CIC score band, the trigger limit for near prime is 8%, and for subprime it is 4%. So this is also very important point with regard to risk tiers. Okay, this ceiling will be monitored on quarterly basis by RMA. Okay, I think this concept is fairly understandable, and from an exam point of view, I think you all got a fair idea about it. So here, what you have to see is what is the CRG rating and what is the score band for near prime and subprime. And one more thing is for subprime borrowers, what is the additional rate of interest that you need to charge? It is 0.25%. Now coming to another important point with regard to retail lending schemes is what is the priority sector ceiling for retail lending scheme? Okay. See, priority, may I request De Silva to just clean up the screen for me because it is. Okay, thank you.
Okay.
So, priority sector lending. What is priority sector lending? Priority sector lending is RBI is there also put some mandatory mandated something with regard to lending. That is, suppose if you are sanctioning 100 lakhs rupees, 40% of that should be towards priority sector. What is priority sector? The priority sector is also identified by RBI. That is, these particular sectors. There, you will be having a separate session for priority sector lending also. So priority sector lending will be having sectors under MSME, retail lending, social renewable energy, agriculture, all those things. Okay. For retail lending also, RBI has mandated, okay, these much sectors are identified as priority sector. So you need to have more thrust on these areas or these particular sectors while lending in a particular financial year. So what are the sectors under retail lending for priority sectors? That is, loans for educational purpose, including vocational courses not exceeding 25 lakhs will be considered as eligible for priority sector classification. So this is very important because this is a recent change, because up to previous year it was 20 lakhs. Now it has been increased to 25 lakhs. So loans up to 25 lakhs will be classified as priority sector for education loans. Okay. Loans currently classified as priority sector will continue till maturity. Now, in the case of housing loans, so under retail lending, there are primarily two areas of priority sector. One is education loan and the other one is housing loan. All the other loans under retail lending sector are non-priority. So education loan we already studied, it is up to 25 lakhs. And in the case of housing loans, it is there also not all housing loans are priority sector housing loan. What are the category that we are going to study here? Loans for repairs to dwelling units shall be eligible for priority sector lending subject to following limit. That is, if the area of lending or the area of loan is having a population of 50 lakhs and above, up to 50 lakhs loan will be classified as priority sector lending. That is in the case of repairs and renovation. Okay. If the maximum cost of dwelling unit is up to 63 lakhs, then that particular loan will be classified as priority sector. Similarly, if the population is 10 to 50, loan limit up to 12 lakhs with the cost of dwelling unit up to 57 lakhs will be classified as priority sector. And the centers with the population below 10 lakhs, loan limit up to 10 lakhs with the maximum cost of dwelling unit up to 44 lakhs will be classified as priority sector lending. This particular table is with regard to repairs and renovation loans only that you need to do. So, suppose if you are giving a loan of 15 lakhs for repairs and renovation for a house with the value 100 lakhs, it will not be treated as priority sector lending because the value of the house should be maximum only 63 lakhs. Okay. And population, if it is between 50 and 10 and 50 lakhs areas, the loan limit will be 12 lakhs. So this also you need to have an understanding. Okay. Now coming to actual loan. Till now, what we were discussing? We were discussing about repairs and renovation. Now the construction. So for population up to above 50 and above, if the loan is 50 lakhs and the maximum cost of dwelling unit is 63, it is classified as priority sector. And if it is 10 to 50 lakhs, the loan limit is 45. And with less than 10 lakhs, the loan limit is 35. Okay. So the priority sector, I think it is now fairly understood for all of you. The loans that are considered as education loan and housing loan. Within housing loan, you have two categories: repairs and renovation and fresh construction. And there are classification criteria also. Not all loans are priority sector loans. It will be based on the cost also. Okay. Now coming to review of long-term retail loans. So retail loans, as you all know, term loans have to be reviewed on a periodical basis. So in the case of retail loans, what is this guideline for review of long-term retail loans? So all retail mortgage-based loans with the present exposure above 100 lakhs and all education loans backed by mortgage with the present exposure above 50 lakhs shall be within the scope of review. That means all retail mortgage-based loans with the exposure 100 lakhs and above and education loans above 50 lakhs has to be reviewed under long-term review policy of the bank. Okay. Now, what is the periodicity? The periodicity is it shall be reviewed within 2 years from the date of first disbursement for the first time. All retail loans up to 5 crore sanctioned by circle head and above authorities are exempted from the applicability of annual review of term loan. So this is also one important point. You need to understand what is the limit for review of retail loan and what is the periodicity. The periodicity is 2 years for the first time, and after that it is annual review. Okay. And what is the exemptions? Up to 5 crore sanction. If the loan is sanctioned by circle head up to 5 crore, it is exempted from annual review of term loans. And another thing is switch over from floating to fixed rate, fixed ROA regime. That is, this is also comparatively new guideline introduced by the bank in 2023-24. So you can expect questions from this also. During the receipt of interest rate linked to respective loan accounts, option shall be provided to the borrower from switchover to floating rate to fixed rate or vice versa during residual tenor of the loan account. That is, borrowers are always have this option to switch over from floating or to fixed to floating. But there are some restrictions in those switchover. That is what we are going to study here. For housing loan, all various number of times borrower shall be allowed to switch over from to respective interest rate shall be restricted to 3 times, and the reset period shall be minimum 3 years between switchovers. So borrower can switch over from floating to fixed or fixed to floating, but it is restricted up to 3 times during the entire tenor of loan, and minimum reset period between the switchover should be 3 years. And that is for housing loan. And all the other EMI based retail loans, it is 2 times and reset period shall be minimum 3 years. So this also you should understand from an examination POV. This key fact statement we have already studied. Now coming to next important thing with regard to retail lending is the frequency of valuation of securities. Okay, the frequency of value, because most the valuation policy of the bank is put forward by RME. Okay, but within that, the retail asset being vertical will come up with guidelines with regard to frequency of, I mean, valuation of security guidelines. That is what we are going to study here. So, housing loan variants, Canara Mortgage, Canara Rent, Canara LRD, Canara Site, and Education Loan, where uh, loan outstanding is 50 or above, revaluation of property has to be undertaken through empaneled valuers once in every 5 years. Normally, as you all know, in the case of MSME and all, it is 3 years. But in the case of housing loans with the outstanding above housing loans and the other schemes, that is Canara Mortgage, Rent and all, if it is above 50 lakhs, 50 or above, that is inclusive of 50 and above, the revaluation has to be done once in every 5 years. That is one point here. And the second thing is, bank shall obtain two independent valuation report from two independent valuers where the value of individual property is above 5 crore and above. So it is uniform across all the schemes, not only for retail lending, for MSME, agri, everything. It is 5 crore and above. Two independent valuation reports has to be taken. One thing you have to observe here is, it is not about the loan value, it is about the value of the collateral. If the value of the collateral is above 5 crore and above, you need to obtain two independent valuation. And the next thing about securities is, if the land is acquired or purchased beyond preceding 1 year, 85% of the fair market value assessed by the bank's approved value should be taken as value of the land. That is, this is in the case of what vacant land to be that is taken as collateral security. Okay, if the vacant land is taken as collateral security and it is acquired beyond 1 year, so you can take only 80% of the market value as the collateral value for that particular loan. That is, this is usually happens in the case of education loans only, because for education loans only, we in the case of retail lending, only education loans vacant land is acceptable. Okay, so in the case of education loans, if you are taking a vacant land, you can take only 85% of the value as collateral security value for reckoning collateral comfort. Now, another important guideline is the RERA. What is RERA full form? It is Real Estate Regulatory Authority. So, in order to safeguard the interest of buyers in the case of purchase of flat, central government has come up with a statutory body that is called RERA, that is RERA, and it is set up in each state under the supervision of state government. Okay. So what is, for which all projects the RERA guidelines is applicable? This is very important with regard to exam point of view. That is, RERA registration is mandatory for projects exceeding 500 square meters or with more than 8 units. So suppose if you are tomorrow, if you are financing a project where the number of units is more than 8, you need to get RERA approved builders only. So RERA guidelines is mandatory for those projects. Okay, this you need to understand. The point here is, RERA registration is mandatory for projects exceeding 500 square meters and more than 8 units. A completion certificate. Teacher's loan. This is, sorry, it's a typing mistake. There is no teacher's loan there. Sorry. Now, the next point is, where the promoter developer is owner of the land, the proceeds of housing loan sanctioned for purchase of property under RERA projects shall be disbursed only to RERA approved escrow account. See, in the case of a RERA approved project, there will be two accounts maintained by the builder. That is, one for the project specific and the other one is for their uh, builder's account. Okay. Suppose if the project is RERA approved and that particular land is owned by the developer or the builder itself, then the proceeds for housing to be sanctioned, disbursed only to their escrow account of that particular project, where 70% of buyers' funds are mandated to be deposited. I will tell you this particular point in detail here. See, suppose if you are financing a project which is RERA approved, the flat is under construction. Okay. Suppose if it is like say the project name or the builder name is say Prestige Group, and the Prestige Group's one project you are financing, your customer is purchasing a flat for that particular project. Okay. There will be two RERA accounts for that particular builder. One is the builder's general account, general current account, and other one will be an account exclusively for that particular flat project. Okay. And the buyer is, sends some amount to that particular project, okay, for purchase of that one. 70% of that amount, that is, suppose if he has sent 100 lakhs as for the sale for, I mean, for purchase of that particular project, 70 lakhs will be deposited to this project specific accounts. 30% only will be uh, allowed for the builder to use for their general account. So that's what it is mentioned here. You need to understand what how much is the percentage that is needs to be deposited in escrow account. That is 75%. Some sorry 70%. Remaining 30 they can transfer it back to the their general current account. And the next point is very important. It has been introduced by the bank in this particular year, that is in 2025. It is introduced. So you need to have an understanding about this guideline. Okay. In case the number of housing units financed in a single block or tower of a particular project exceeds 25% or 20 units, whichever is higher, or up to 50% or 20 units, whichever is higher, of total units, prior clearance shall be obtained for circle head COC for further lending under the project. That means you cannot keep on lending to a particular borrower or particular project for a particular builder, because this guideline is introduced in order to avoid concentration risk. Okay, because suppose if any due to any reason the project fails, our entire thing or our entire financing will be under threat. So in order to avoid the concentration risk, bank has come up with a guideline, that is if the number of housing loans financed for a particular single block or tower of a particular project exceed 25% of 20 units, or whichever is higher, or the total project as a whole, if it is 50% or 20 units or above, we need to obtain prior clearance from circle head. Okay, so these figures you need to understand: 25% 20, 50% 20. Now that is with from circle head permission. Now if it is above 50% or 20%, that is we up to 50% or 20 units, it is circle head. What if it is above 50% or 20 units? The clearance has to be obtained from CGM HO CSE of vertical. Okay, I think this is fairly understood by all the participants. Now, introduction of tie-up arrangement with the corporate vehicle DSA. Corporate vehicle DSA was introduced by bank in 2024. So this is relatively a new guideline. So that is corporate vehicle DSA is applicable in metro and urban centers of the bank. The corporate DSA that is empaneled is Girnar Software Private Limited. As you all know, their popular trade name is Cardeco. You might already, most of you have seen their app. It is Car Deco. So the promoter is Mrs. Girner Software Private Limited. They are our corporate vehicle direct selling agent. What is the fees payable to them? 1.3 percentage of disbursed loan amount with a maximum of 1 lakh for each disbursed proposal. The above payment is to be permitted by circular. Okay. So main points here is corporate vehicle DSA is applicable in which all centers, that is metro and urban centers, and the corporate DSA name is Girner Software Private Limited. Now coming to the till now we were discussing about the general guidelines with regard to say or retail lending. Now we'll be moving on to some of the important schemes of retail lending. Okay, so we'll be starting with the relatively new schemes, because always in the examination the schemes that will be introduced, that are introduced very recently, will be uh, having more importance or more weightage in the examination. So one such scheme is Canara Instant Mutual Fund. So before going on, can we have a quick break of, say, now it is 10:56. Shall we restart by 11 o'clock? De Silva, sir?
Sir, yes, sir.
Yeah.
We'll have
So now
break.
it's 10:56. We will restart by sharp 11 o'clock. Okay.
Okay, sir.
May I request De Silva, sir, to kindly clear the screen for me? Yeah. Thank you, sir. I think if it is possible, can you just uh, disable this drawing for the participants? Because I think.
Sir, control for annotation will be with you, sir.
Mhm. Okay, okay, okay. Yeah. So we'll restart without wasting much time. So we were discussing about the schemes part now. The schemes that are the new retail lending schemes that were introduced by the banks, we will discuss first. Then we will move on to the important uh, other schemes. Okay. Now, Canara Insta Mutual Fund, it is a new scheme introduced by the bank in this financial year. So you can expect questions from that particular scheme. So it is applicable to both existing and new to the bank customers as both term loan and overdraft. There are 43 AMCs, that is asset management companies, mutual funds are eligible for financing under Insta Mutual Fund. The AMs, what do you mean by 43 AMCs? It is a asset management companies is like our Canara Robeco Mutual Fund, Quant Mutual Fund, Aditya Birla Mutual Fund. Those are that are known as asset management companies. Like that, 43 such asset management companies, mutual funds managed by those 43 AMCs available for financing under this particular scheme. The list of those 43 are given in the circular. I don't think you need to by heart all those 43 AMCs. Just for understanding, I'm telling. Now, and one more thing is that before going to the scheme in detail, for every retail lending scheme, the basic things that you need to study is the what is the repayment tenor, the maximum uh, criteria for entry age or exit age, those things. What is the margin? These are the basic things. You need not mug up the rate of interest, processing charges, sanctioning authority. Uh, these things you can completely ignore, because if you study those, because very rarely those questions have asked in retail lending. In fact, I have not seen any questions with regard to that area, like what is the rate of interest. But in MSME and all, for from some specific area specific or some schematic lending, I have seen the rate of interest. But for retail lending, I have not seen any questions like who is the sanctioning authority for this, what is the rate of interest for this particular loan, like that. So you need to study the repayment part, the maximum loan amount, moratorium, those things only. Will be I have given the PPT also in such a way. So the repayment for Insta mutual fund is if it is given as a term loan, it is maximum 36 EMIs with the maximum headroom of 1 year. Moratorium period is nil. Okay, and the customer CIC should be 700 and above. Uh, Staffs are also available. Eligible to avail this particular loan. The NTH for staff is 30%. And now the most important part of this particular loan is what is the margin or LTV. Those cases that we are going to share. Uh, that is, if the loan you are giving the loans against equity or hybrid mutual fund, uh, 50 percentage of NAV with the minimum of 25,000. That is, I am talking about loan here. Okay. In case of equity or hybrid mutual funds, the maximum loan that you can finance is 50 percentage of NAV. That is net asset value with a minimum of 25,000 and maximum of 10 lakhs. And in the case of debt, it is 75 percentage of NAV with a minimum 25,000 and maximum of 1 crore. So here what you have to understand is in terms of minimum amount, the amount is ceiling is same for both equity and debt. It is 25,000. But in the case of maximum amount, in the case of equity and hybrid, it is 10 lakhs. And in the case of debt, it is 1 crore. So see, as you all know, equity and hybrid is always having more risk. That's why bank has given the margin as 50 percentage in terms of NAV for equity and hybrid, and the maximum loan amount is 10,000. And debt mutual fund, it is comparatively safer advance. So the margin is 25 percentage. That is NAV maximum you can give 75 percentage, and maximum loan amount is also 1 crore. The question can be asked in another way also. That is, what is the margin for equity and hybrid mutual fund? It is 50 percentage. And in the case of debt mutual fund, it is 25 percentage. Okay. Now coming to LTV ratio, it shall be 50 percentage in case of equity mutual fund, or 75 percentage in case of debt mutual fund, and required margin to be maintained at all time during the currency of loan. See, LTV ratio is very important in the case of say mutual fund, because unlike a housing loan or car loan or any other loan, retail lending loan, the LTV of this particular scheme keeps on changing. It is very dynamic in nature. It depends upon the market rate of the fund. So LTV should be always in uh, compliance with the scheme guidelines. Okay. In order to monitor and avoid LTV breach, a trigger shall be initiated at specific LTV levels, and suitable intimation in form of SMS shall be provided to borrowers to regulate the limits within T+4 working days. See, this is also important. What is the trigger level that is initiated by the bank to intimating the borrower to regularize the loan amount, and the time frame given for them to regularize is T+4 working days. That is the day in which they receive the SMS. Within 4 days they have to regularize their LTV. If the same is not complied, proceedings for liquidation of the mutual funds lien marked to the loan shall be undertaken. In case of equity mutual funds, trigger shall be at 60 percentage LTV. In case of debt mutual funds, it shall be at 80 percentage. This also you need to understand. That is, equity mutual fund, we already said it is the trigger will be initiated at 60 percentage LTV, and in the case of debt, the trigger will be initiated at 80% of LTV. So once the trigger is initiated, within T plus 4 working days, the customer has to regularize the limit. Otherwise, bank will be proceeding with the liquidation of mutual fund and the loan will be closed without much risk for the bank. And the post-disbursement maintenance of all loan accounts under the new product shall be mapped to Mumbai Capital Market Services branch with the DP code 57076. Okay, this is just for information. So with regard to mutual fund, the main thing is the repayment tenor is 36 months with no moratorium period. The CAC score is 100 and above. The NTH is 30 percentage, and the margin, it is 50 percentage of NAV for equity and hybrid and 75 percentage of NAV for debt. Minimum loan amount is 25,000 for both the cases, and maximum loan amount is 10 lakhs and 1 crore for equity and debt respectively. And next thing is we need to know what is the time available for the regularization once trigger is enabled. It is T plus 4 working days, and trigger will be initiated at 60 percentage of LTV for equity and 80 percentage of LTV for debt. Canara rooftop solar will come back a little later. And another thing is new retail loan, gold loans, I mean, scheme which was introduced last year. It is Swarna monthly interest. The minimum amount is 5,000, maximum is 35 lakhs. Maximum 75 percentage of appraised gold value we can give. Interest charge to be serviced as and when due at monthly intervals, and LTV to be maintained at 75 percentage. Very easy product, not much of complications here. Now, Canara Heal. This is also one very important scheme which was introduced last year. And why I give importance to this scheme is because there has been some modifications introduced in this for this scheme. That's why I give importance to this particular scheme. Canara Heal, that is healthcare emergency loan under retail segment. It is a STP loan, that is straight through processing loan. It is the guidelines are very simple. It is available for customers who are having a valid health insurance policy aged between 21 and 55 years. Okay. Eligible customers are existing in the case of salaried and non-salaried class. But if the customer is new to the bank, only salaried class customers are eligible. And also, they need to satisfy one criteria, that is their minimum salary credit should be at least 50,000 or per month in the account. Okay. So this is very important guideline. Existing customer means both salaried and non-salaried you can consider, but in the case of new customers, only salaried class you can consider. That also they need to have a minimum salary credit of 50,000. And this CIC score is 700 and above, just like Canara Insta mutual fund. And another guideline is customer should not have slipped to NP or SMA category in last 12 months. As per CIC, minimum loan quantum is 25,000 and maximum is 5 lakhs. Here also you can relate this with the Canara Instant Mutual Fund, where the minimum loan amount was 25,000 for equity and both equity and debt, and the maximum here is 5 lakhs, whereas in mutual fund it was 10 lakhs and 1 crore. Okay. Now, what is the quantum in terms of their income? For salaried customer, the maximum quantum is 6 times of average of last 3 months salary credited in the salary account. Okay. Minimum NTH is 10,000 rupees. There is no percentage here. It is 10,000 per month. No minimum credit turnover in the salary account is required. Now coming to this salary credit, there is another guideline. In the last 6 months, at least 4 times monthly salary shall be credited, subject to mandatory salary credit in the savings bank during preceding last 2 months from the date of loan application. That's last 6 months, at least 4 times the monthly salary shall be credited to account, and it should be minimum immediate last 2 months it should be credited also. This is in the case of salaried class. For existing customer having salary account with other bank, the eligibility criteria is as follows. That is, during the last 6 months, customer shall maintain minimum average SB balance of 50,000 or in our bank and having minimum salary credit turnover, minimum credit turnover of 1 lakh and debit turnover of 75,000. For new customers, we have already told in the case of new customers, already salaried class is eligible. For them, last 3 months salary slip or PF statement shall be validated and last 1 year bank statement shall be uploaded. So this is about Canara Heal basic guidelines. That is, it is eligible for customers with a valid health insurance policy, aged between 21 to 55, salaried and non-salaried in the case of existing. In the case of new, it is only salary class is eligible. And in the case of new to the bank, salaried class, their minimum salary credit should be 50,000. And CIC score above 7,000. SMA or NPA should not have been reported for last 12 months. Minimum loan amount 25,000, maximum 5 lakhs. Salaried customer 6 times, maximum loan quantum is 6 times of average of last 3 months salary credit. And NTH is 10,000. Now, the next point, that is loan under the Canara Heal scheme for customers suffering with terminal illness shall be availed at branches. This is a new guideline which has been introduced by the bank from this year onwards. So this is very important. If the customer is suffering from terminal illness, they are also eligible for Canara Heal. There, the guidelines are funds will be available for 15 days from the date of disbursement to avail the credit line on UPI, and on 15th day end, any unutilized portion shall be cancelled. So this is also a new guideline introduced. That is, the funds will be made available for the customer for 15 days from the date of disbursement as your credit line in UPI. After the 15th day, whatever amount that is left unutilized, it will be cancelled automatically. And the repayment period is 36 months with a 2 months moratorium. So this is very important because in Insta mutual fund, we have seen the repayment period is same 36 but with a nil moratorium. But in the case of Canara Heal, it is 2 months moratorium. And with regard to cooling period, this is also a new guideline introduced. Funds available under Canara Heal, the credit line UPI, shall be available for utilization for the customer after applicable cooling period from NPCA guidelines. Presently, 24 hours for Android users and 72 hours for iOS users. That means once the credit line UPI is credit line is introduced or made available for the customer in UPI, after 24 hours of cooling period, it will be available for Android users, and the cooling period in terms of iOS users, it is 72 hours. So these figures you need to mug up. What is the cooling period? In case of Android users, it is 24 hours. In the case of iOS, it is 72 hours. Now the next thing is some of the guidelines that is changed from this year onwards with regard to retail lending. Okay. From circulars, I have put these points. Okay. Education loan margin or the disbursement proceeds are not to be credited to the savings account in the held in the name of minor, wherein the aggregate withdrawals shall not exceed 10,000 in a month. So it is like see, education loans we will be in case some cases we will be giving to minors, especially in the case of first year or second year, they will be minors, and in that case, the aggregate withdrawals shall not exceed 10,000 per month. This is a new guideline introduced by the bank from this financial year. In the case of education loan, earlier also it was there. In the case of general guideline, there was a guideline saying that aggregate withdrawals in the case of minor account should not exceed 10,000 in a month. Now, what happened is the bank has extended that to education loan borrowers as well. Okay. And another important thing is, as you all know, from BC channels, that is business correspondent, there were 56 existing services were available. From this year onwards, bank has introduced two more facilities, that is TDS certificate and interest certificate in the case of housing loan. That is, you all know, like customers will be approaching that is especially housing loan customers will be approaching banks during January, February, March period for provisional interest certificate. That particular facility has been introduced in BC channels from this year onwards by the bank, along with the TDS certificate, and the rate is 10 percentage, sorry, 10 rupees plus GST. Okay. Now the next thing is PM Vidya Lakshmi portal. What is the application fee? Uh, Earlier it was 100 rupees plus GST, that is 180. Now it has been increased to 200 plus GST. Okay, that is also a new guideline introduced this year. Now, coming to the next thing is to facilitate easier arrangement on loan balancing of loan documents. A 17-digit sequence number has been implemented for retail loans in CBS this year. Why I have included this guideline is in some 5 years back examination, there was one question asked, that is, we all know no, this debit card. There is a sequence, the 16-digit sequence. What does the sequence for sixth and seventh, eighth, like that questions were asked. So this may be a possible question this year, because this is introduced very recently in this year onwards. In 2025 it is introduced. So as you all know, now the loan account numbers are not running serial number, so it is very difficult for the branches to have loan balancing. So bank has introduced a 70-digit sequence number for retail loans. The first digits, 5 digits, is branch DP code. The next 2 digits will be year of loan in YY format. The next 5 digits will be product code, and the last 5 digits will be running serial number. This you just have to understand what is the relevance of this 17-digit sequence number. The first 5 digits will be DP code, 2 digits year, next 5 digits product code, and the last 5 digits will be running serial number. Okay. Now coming to Vidya Turant scheme. Vidya Turant scheme, there are, as you all know, category A, B, C type of institutions are there. So this is like every year bank will come up with the additions and deletions of institutions under Vidya Turant. So category A, the maximum loan quantum under Vidya Turant is 50 lakhs. There are two institutions. For category B, the maximum loan quantum is 40 lakhs. Category C, the maximum loan amount is 30 lakhs. So the possible question here is, what is the maximum loan amount under Canara Vidya Turant for each category? So like A, B, C, what is the maximum loan amount? So Vidya Turant, as you all know, it is a collateral free loan given to students acquiring admission in top tier universities or colleges in the country. Provisioning for standard housing loan, it is 0.25 percentage, and CREHL, it is 0.75 percentage. What is CREHL? What is those things will come to in detail in the schemes guideline. So this is about provisioning. So now the another thing is inclusion of ULPIN, that is Unique Land Parcel Identification Number, ULPIN. It is introduced, mandatorily to be introduced in LSR as part of legal scrutiny with the effect from 1/5/2025. So, what you need to understand is some state has adopted this ULPIN. That is, each land or each property, they have given a unique identification number called unique land parcel identification number. Okay, not all states it is available, but there are states wherein this particular ULPIN has been introduced. Wherever you are taking legal scrutiny report for those states, you are mandatorily that ULPIN has to be mandatorily included in LSR. So this is introduced with effect from 1/5/2025. So you need to understand what is the full form of ULP. Okay, it is Unique Land Parcel Identification Number. Which all states it is implemented, that is also available in the circular for ULPIN. You can just search for ULPIN in circulars, you will get the relevant circular. Okay. Now, another guideline change that has happened is restriction of for RH and branches from fresh credit card issuance with effect from 10/3/2025, where the non-NPA under credit card portfolio is 5%. We already studied that is embargo. It is 5% for all retail lending schemes. Now, from 10/3/2025, bank has introduced that embargo for credit card portfolio also. It is 5% as similar to retail lending. It is with effect from 10/3/2025. And what is the validity of digital consent obtained from the customer? That is 72 hours. It is like in the case of credit card application and all, you will be getting a digital consent. What is the validity of that digital consent? It is valid for 72 hours, or that is uh, 3 working days. Not working days, 3 days. Uh, Now, at present, 15 corporate DSAs under tie-up arrangements are there under Canara Housing Loan. We already studied. We have one Canara Vehicle DSA, corporate DSA, that is Girner Software Private Limited, Cardeco. But we have 15 corporate DSAs were there for housing loan routing tie-up arrangement. Now, in this year onwards, we have empaneled additional 3 entities. That is, one is Paisa Bazaar Marketing and Consulting Private Limited, Basic Enterprises Private Limited, and Easy Loan Techno Loans, Techno Solutions Private Limited. These are the 3 corporate DSAs that have been empaneled by our bank for corporate DSAs under housing loan leads or business. Okay, so at present, the total corporate DSAs are 18 in numbers. Unlike vehicle loan, the area covered is pan India, because in the case of corporate vehicle DSA, it was metro and urban branches only, but here it is pan India. So with this, we came to end of the general guidelines and the most important schemes that are now we'll just go through the chat quickly because there may be some doubts. Uh, Provisioning is also just like say a capital requirement. That is, a bank needs to give provisioning that is set aside from the profit. So see, from profit, some portion of our amount, that is profit, needs to be set aside in the case of loans. Okay, that is known as provisioning. See, suppose if it is a standard loan, 0.25% of the outstanding should be set aside from the profit. Once the account turns NPA, the provisioning goes up. That is, it will go up to 25%, 40%, or even 100%. If it is doubtful or loss, 100% to be provided for in the case of this one. Uh, from the this one profit. So that's why it is very important to keep our NPA very minimum. Okay. Headroom is like see in the case of uh, retail loans. See, there are while processing the loans in labs, you might have come across this particular scheme. That is fixed tenor, variable EMI, variable tenor, fixed EMI, like that. No, there are 2 options. Okay, so suppose due to rate change, there may arise 2 scenarios. The customer can go for the increase in EMI or increase in tenor. Okay, increase in EMI means the tenor will be constant. Okay, the EMI will uh, stay as it is, means the tenor will go up. So, but tenor we cannot keep on growing. The maximum period up to which the tenor can grow up is known as headroom. You understood? No. Yeah, I will be sharing the PPT. Okay. I think everybody is RERA approved layouts are eligible for site loans. See, RERA is not a approval authority for layouts. Layouts will be always uh, approved by the DTCP, District Town Planning Corporation. Like in Karnataka, it is Muda, Huda, like that. Like Mysore Urban Development Authority, Hassan Urban Development Authority, Madikeri Urban Rural Development Authority. RERA is a regulating authority for projects. They are not for this one. CRG3 trigger rate, it is quarterly or financial year. See, trigger will be enabled, checked for every quarter, and the total, the which should not will be checked for financial year as such. That is, for an entire financial year, it should not cross 10%. And this, whether the breach has happened, it will be checked every quarterly. Okay, suppose at the September month, if they feel that the trigger has already breached, and at that time, the bank will issue that guidelines that saying that we cannot lend for further loans under CRG3 or CRG4. Canara Rooftop will be taking along with this one. While granting housing loan for plot and construction is valuation report required. Yeah, it is valuation is required. So headroom, I think it is. We'll be continuing with the next part now. The new points, no. So we'll be continuing with the I mean this one schemes now. So housing loan. This is one of the most important retail loans, as you all know. So with regard to housing loan, the guidelines are very simple, and it is uh, very straightforward also. The quantum of, we'll straight away start with the things proceedings. In the case of housing loans, there are so many housing loan products available in our bank. That is housing loan to NRI, general housing loan to agriculturist, housing loan non-priority, all those things. And this is the general housing loan that we are discussing about right now. The quantum of loan, it is 72 times last drawn monthly salary. And in the case of non-salaried, it is 6 times average of last 3 years annual gross income. And NTH is 25 percentage, 10,000. uh, Suppose if you need to consider uh, 84 times or 7 times in terms of loan quantum, then the NTH will go up to 20,000 or 25 percentage. Okay. And one important point here is, see, you can consider 84 times and 7 times of loan quantum only in the case of low and normal risk customer. Okay, not for high risk customers. Okay, so this is the general guidelines with regard to housing loan in terms of quantum. The general quantum is 72 times 6 times. But if you need to consider 84 times 7 times, it is NTH should be 25 percentage, 20,000. Now margin we already discussed earlier, but this we are going a little bit deeper into the margin. So up to 30 lakhs, the margin, if the house is new or up to 10 years old, the margin will be 10 percentage. And if it is the loan is between 10 to 30 to 75, the margin is 20 percentage. If it is above 75 lakhs, it is 25%. And if the house is above 10 years old, irrespective of the loan amount, the margin is 25%. See, this is a very common question across all the cadres of exam. What is the maximum, what is the margin for housing loan in terms of age of the building? Okay, so this you need to uh, mug up somehow. Up to 30 lakhs, it is 10 percentage. 30 to 75, it is 20 percentage. Above 75, it is 25 percentage. The in terms of new or house or flat with 10 years old. If it is above 10 years, it is uniformly 25 percentage. Now, this is another very important point. For all housing loans sanctioned for third unit and above, classified under HL, NP, CRE. What is NP? It is non-priority. CRE, rate of interest chargeable is 0.25 for third unit and fourth and subsequent unit is 0.5 percentage of above card rate. Now, another important point here, it is I'm telling it from the practical point of view. What what is the criteria for checking the third or fourth or fifth housing unit? Normally, we will be seeing like the customer will be approaching us for a house with four kitchens or five kitchens. We usually consider them as commercial real estate, right? But normally, it is not to be like that. Okay. The number of units is on the basis of assessment number or the door numbers. Okay. So even if the house is having four kitchens, okay, suppose the door numbers is only two, you need to treat them as two separate units, dwelling units only. Okay, and so it is not about number of kitchens that defines the number of units. It's about the door numbers or assessment numbers. So if the up to three, up to two housing loans, it is normal housing loan. If it is third and above, it is treated as HL, non-priority commercial real estate. That is HL CRE. HL CRE, we also already seen the uh, provisioning is 0.75 percentage as against normal HL, it is 0.25 percentage. So in terms of rate of interest, you are required to charge additional 0.25 percentage for third unit and fourth and subsequent unit should be it is 0.5 percentage. This is also an important question in terms of examination. That is what is the additional rate of interest that needs to be charged for HLCRE third unit. It is third unit, it is 0.25, fourth and subsequent unit, it is 0.5 percentage. Now, coming to the very important point of uh, moratorium and repayment period, where the housing loan is granted for purchase of site and construction of house therein, the borrower should start construction of the house within a maximum period of 12 months from the date of disbursement of the housing loan. Okay. uh, that is this kind of construction loans we usually come across. That is, we have given the loan for site purchase and house loan, house construction, but the customer will not be constructing the loan, constructing the house in within a stipulated time. So they may be considering it as a investment, but we cannot leave it as such. The customer is required to start the construction within 12 months from date of first disbursement of the loan. Okay. RERA registration is not about this. We have already discussed. Residual life of the property must be 10 years, at least 10 years more than the repayment end date in the case of financing already built house. That is, in the case of old house, suppose if the age of the residual age of the building available is say 30 years, the maximum repayment that you can give is 20 years. That is known as residual life of the property must be 10 years more than the repayment end date. Okay. So suppose if the residual age of the building is 25 years, the repayment period that you can give is 15 years. If it is 40 years, 30 years. If it is 45 years, then also 30 years because the maximum repayment period that we can give is 30 years on. Now, in the case of purchase of ready-built house, the repayment should commence within 2 months from the date of first disbursement. This is very important guideline. In the case that is the moratorium period. The moratorium period for ready-built purchase of a ready-built house purchase or flat purchase, the moratorium maximum you can give is 2 months only. In the case of construction, you can give up to 24 months, or in the case of flat, it is up to 36 months. Okay. So we are discussing about three different uh, moratorium period. One is the moratorium in case of ready-built house or flat. It is 2 months in the case of ready-built. In the case of construction, it is 24 months, or 2 months after the completion of house, or 24 months from the date of first disbursement. In the case of flat, it is 2 months of completion of construction, or 36 months from the first disbursement, whichever is earlier. Now, circle head CSE can give additional repayment holiday of 12 months beyond permissible holiday period of 24 months for construction of house. See, we already discussed for construction, the maximum repayment period, holiday period is 24 months. On top of that, 20 months can be given by circle head, and again additional. In the case of flat construction, additional 12 months on top of 3 years can be given by GM, HO, CSE. Okay, so you need to understand the three different holiday periods that is available for housing loan. Okay, and who is the authority who is empowered to permit additional. In the case of house construction, circle head can give 12 months. In the case of flat, HO can permit 12 months. Canara Kutir, we all know, very simple product. It is given in rural, urban, metro, and members of self-help group up to with the income up to 1 lakh per annum, and 1 lakh to 3 lakh per annum. There are two components. For 1 lakh to maximum up to 3 lakh, up to income household is up to 1 lakh. The maximum loan quantum is 5 lakhs. And if it is 1 lakh to 3 lakh, the maximum loan quantum is 10 lakh. NTH shall not below 60 percentage, as against the general guideline of 25 percentage. In the case of Kutir, the NTH should be minimum 60 percentage. Okay. All the other guidelines with regard to margin, repayment period, holiday period are as applicable to general housing loan. The thing that is different here is in terms of maximum loan quantum and household income and NTH. Now coming to home loan plus, the home loan plus product is individuals aged between 18 and 75 years. See, I'll give one point here also. Like in the case of housing loan, we already know the repayment should not go beyond 75 years, right? The entry age, based on the entry age, there are so many guidelines that if we discuss that here, the class will go on stretching. That's why I didn't do it here, because it is a bit complicated thing. That is the entry age, if it is 60 to 75, 70 to 75 guidelines are there, that I advise you to go through the retail lending policy, because it is very simple only. Okay. But in general, the repayment should not go beyond 75 years. Okay. So in the case of home loan plus, the age between 18 and 75 years, well, the loan quantum is 24 months of gross salary, maximum 50 lakhs in the case of salaried class. In the case of non-salaried class, it is 2 times of 3 years average gross income. They are also the subject to maximum loan quantum is 50 lakhs. NTH is 25 percentage for salaried class and 30 percentage for non-salaried class. Here the notable thing is like there is no amount fixed, but the amount is always, it is as applicable to housing loan, because the amount should not go below 10,000. Okay, but 20 percentage differs here. In the case of home loan plus, it is 25% for salaried class and 30% for non-salaried class. Now, wherein housing loan is availed for outright purchase of property, value at the time of sanction only shall be reckoned. However, after ensuring a gap of minimum 2 years between two valuation, fresh valuation may be reckoned for determining the loan quantum. That is, suppose if the housing loan, I mean home loan plus is given soon after the housing loan is given for outright purchase of property, value at the time of sanction should only be taken into account for reckoning the home loan plus eligibility. But after ensuring a 2 years gap of between two valuations, then fresh valuation may be taken. That is, suppose if the previous valuation was taken in 2023, now in 2025, after completing 2 years, a fresh valuation can be taken in the case of home loan plus. Maximum tenor is 360 months, which can be permitted only by CGM, HO, CAC. In the normal circumstances by RO head, I mean RH head, RO head or circle, the repayment period maximum can be given for Canara Home Loan Plus is only 180 months. 360 months or leftover period of housing loan can be permitted only by CGM, HO, CS. That is, anything above 15 years can be permitted by CGM, HO, CS. Now, housing loan to agriculturist. This is a fairly not new. It was in existence for long, but not so popular. Only in some areas it is available, like where agriculture is very prominent. In those areas, only this product is very fast moving. So the guideline is very simple. All agriculturists owning, cultivating agricultural land for more than 5 acres, if it is irrigated land, and if it is dry land, it is 10 acres. And in case the housing loan to agriculture is the agriculturist is engaged in dairy farm, poultry, plantation corp, or horticulture produce, the minimum land holding level need not be applied. What are plantation crops? Say, suppose if in Madikeri, if you see, there are the prominent farmers are coffee. Coffee is a plantation crop. Okay. There, the 5 acres and 10 acres of land holding level is not mandatory. Only thing is, their minimum gross annual income should be at least 5 lakhs. So, if the agriculturist is engaged in dairy, poultry, plantation, or agriculture, I mean horticulture, the minimum landholding level need not be applied. Only thing is they need to have minimum annual gross income of 5 lakhs or above. Okay. Suppose if it is other than the dairy, poultry, plantation, or horticulture, then minimum 5 acres of irrigated land or 10 acres of dry land should be there for considering under housing loan, under agriculture scheme. For housing loan for agriculture, it's income certificate issued by Tahsildar or Mandal Revenue Officer or District Revenue Authority may be accepted as proof of income if income tax returns are not available. This is another important point. That is, when you come to Canara Vehicle to Agriculturist, you will understand the difference. In the case of Canara Vehicle to Agriculturist, the income certificate can be given by any AEO promoting manager or AEO of the bank. But in the case of housing loan to agriculturist, the income certificate is mandatory to be issued by Tahsildar or Mandal Revenue Officer or District Revenue Authority. The moratorium period shall not exceed 3 harvesting season in case of half-yearly installments and 2 harvesting season in case of yearly installment. That is, the moratorium period here is not in terms of number of months, it is in terms of seasons. That is, if the borrower has opted for half-yearly repayment, then the moratorium period will be 3 harvesting season. It will be based on the crop that they are cultivating. And if they have opted for yearly installment, the moratorium will be 2 harvesting season. Okay. Now, housing loan to NRI. the minimum age is 21 to 60 years. Circle head CSE can circle head and above authorities can permit repayment period up to 70 years. Okay, that is in the case of NRI, the loan is to be repaid within 60 years of age. But in general housing loan, it is up to 75 years. But circle head can permit repayment up to 70 years. The applicant should have NRI status for at least 3 years, but circle head can permit this relaxation in NRI status with the following relaxation. That is minimum employment abroad of 2 years to 1 year with valid job contract or visa. NRI status from 3 years to 1 year. That is, the circle head can permit NRI status from applicable 3 years to 1 year, provided they should be in abroad for 2 years at least. Okay, this is the guideline. So general guideline is they should have a NRI status for 3 years. Maximum loan quantum is 4 times, subject to NTH is 40%. In the general housing loan, it was 6 times. Now here it is 4 times. The general category, it is the NTH was 25%. Here it is 40%. Now RH head can RH head and above authorities can relax this 4 times to maximum of 5 times. Now, this is very important product. You can expect questions from this particular topic, this particular product, because this is a very new, comparatively new product introduced by the bank in 2025. So you can expect question from this particular product. That is housing loan for customer with a minimal nil income proof. The basic criteria is it is applicable only for customers in metro and urban centers, not in semi-urban and rural areas. Okay. It is applicable to both salaried and non-salaried class with annual income up to 9 lakhs, having no home or at least only maximum one home. Okay. Income of up to 4 members of the household can be combined to calculate the eligibility. The CIC score is 650 and above. Satisfactorily maintained a running bank account or UPI transaction history for minimum period of 24 months should be there. In the case of Insta mutual fund and Canara Heal, we saw that the CIC score was 700. Here it is minimum 650. The entry age minimum is 21 years, maximum is 60 years. Okay, that is entry age means the age of the borrower when the loan is being sanctioned. So the age of the borrower should not cross 60 years at the time of sanctioning the loan. That is meant by entry age. In the case of general housing loan, it is up to 75 years. Entry age can be. But repayment, suppose if it is 74 years, means you will get only 1 year of repayment. Okay. So the entry age is minimum 21 years, maximum 60 years. For home loans, the loan quantum is for metro centers, it is 35 lakhs, subject to maximum project cost of 45 lakhs. For other centers, it is 25 lakhs, subject to maximum project cost of 30 lakhs. This is very important. You need to know what is the entry age, exit age. Sorry, entry age, exit age is same. Entry age it is 21 years, a maximum up to 60 years. The loan quantum is, in the case of metro, it is 35 lakhs, subject to maximum project cost of 45 lakhs. What is meant by project cost? Suppose if he is purchasing a low house of 50 lakhs, he cannot avail in this particular scheme, even though he is asking for only 30 lakhs of loan, because the maximum project cost shall not cross 45 lakhs. Okay. For repairs and renovation, the metro centers it is 10 lakhs. For other centers, it is 6 lakhs. Now, here the income criteria, I mean, the NTH criteria is not on the basis of normal NTH. Okay. Here it is on the basis of EMI to NMI ratio. Okay. What is EMI to NMI ratio? EMI is the existing EMIs, if any, plus EMI of the proposed loan. That is total EMI commitments. Suppose if he is having an existing EMI of 10,000, that needs to be added to the proposed EMI of the housing loan under this scheme. That is the EMI. That needs to be divided against NMI. That is his net monthly income. That is known as NMI. That is, what is the NMI? It is his monthly net income minus taxes, if any, minus his living expense. The living expense is 25% of monthly income or 10,000. So you need to first calculate his existing EMIs, then you need to calculate his NMI. NMI, how you will calculate? You need to take the net income, net monthly income. You need to subtract any taxes is there, you need to minus that one, and living expense also you need to deduct from that. How do you deduct the living expense? It will be 25% of monthly income or 10,000, whichever is higher. Then those two things you need to divide across. That is EMI to NMI you need to divide. Then up to 3 lakhs, that ratio, the net annual income is up to 3 lakhs. The maximum NMI to EMI will be up to 30%. If the EMI, I mean, annual income is between 3 lakhs to 6 lakhs, then the ratio should not, maximum is 55%. If it is between 6 lakhs to 9 lakhs, it is 60%, 55 and 60%. So this is how the NTH is calculated in terms of this minimal and nil income proof. This you need to, this table you need to by heart, because you can expect questions from this one. What is the maximum EMI to NMI percentage where the net annual income is 3 lakhs? It is 30%. If it is 3 lakhs to 6 lakhs, it is 55%. If it is 6 lakhs to 9 lakhs, it is 60%. Now, in the case of salaried customers, if the salaried class and receiving salary through bank account, the average salary credit will be taken as annual income. Okay, that is average for last 12 months will be counted for their annual income. And the annual income we already saw, it is up to 9 lakhs. In the case of self-employed customers, that is individuals or maintaining current account in the firm, name of the firm or his personal name, the credit summation of 8% of credit summation of non-digital transaction and 20% of total credit summation of digital transaction shall be considered as annual income. See, this is you might feel it is very complicated, but it is very easy. Okay, I will explain you. See, in the case of salaried class, how how the income criteria is assessed. In the salaried class, it is very important. You need to take the monthly salary credit for the last 12 months, take the average of that. That is the annual average income. Okay. Now, in terms of non-salaried class, they will be having current account, right? That current account, the total credit summation will be there in the current account. For that credit summation, you need to segregate it into two different credit summation. That is, if it is a non-digital transaction, 8% of that one plus 20% of credit summation of digital transaction, you need to add up. That means, suppose if he is getting, say, payments through UPI, NEFT, or RTGS, 20% of those digital transactions plus 8% of the other non-digital transaction. That is his annual credit, net income. Okay. And suppose if he is assessed under GST, then 8% of their total turnover. You might have seen in the case of customers with GST returns, you ask for GSTR 3B returns, right? There you need to check for the what is his total sales turnover as per GST returns. Okay. Suppose if it is say 100 lakhs. Okay. 100 lakhs is his sales turnover as per GSTR 3B. Then his annual salary will be 8% of turnover. That is, his annual salary will be 8 lakhs. That is presumptive taxation. It is known as of Section 44 AD of Income Tax Act. That is known as presumptive taxation, because presumptive taxation means suppose if you are declaring 8% as profit for you 8% of your turnover as profit, then your uh, balance sheet need not be audited. That is known as section 44 AD of Income Tax Act. So the same logic we are applying in here also. You call for the GST returns, see the GST turnover for last 1 year, you take 8% of total sales turnover, that will be his net annual income. And loan amount in terms of margin, this already we have mentioned in the general housing loan, but there it was uh, up to 30 lakhs, 30 to 75, and 75 and above, right? Here there is a small change. Here the margin varies. That is, in housing loan to nil income proof customers, the margin is up to 25 lakhs. If it is a new or house up to 10 years, the margin is 10 percentage. And 25 to 35, the margin is 20 percentage. And if the house is more than 10 years old, irrespective of the loan amount, it is 25 percentage. So this you need to study in depth, because there is a slight change with regard to general housing loan, where the general housing loan, it was up to 30 lakhs, it was 10 percentage, and 30 to 75, it was 20 percentage, and above 75, it was 25 percentage. Here, the loan amount slightly varies with regard to margin. That is, if it is up to loan amount is up to 25 lakhs, the margin is 10 percentage. Above 25 to 30 lakh, 35 lakhs, it is 20 percentage. And the same margin is uniform for both cases. That is, above 10 years old building means the margin is 25 percentage. And the repayment period also changes. That in the general housing loan scheme, it was 30 years. Here it is only 25 years. Subject to full repayment before the youngest borrower attains the age of 70 years. Earlier in the general scheme, it was 75 years. Here it is 70 years, 25 years. Okay. Age is 70 years, and maximum repayment period is 25 years. Housing loans up to 20 lakhs can sanctioned and disbursed to eligible borrowers under this scheme for construction or purchase of first house with carpet area up to 60 square meter are eligible to be covered under CRGFT-LIH, that is Credit Risk Guarantee Fund Trust for Low Income Housing Scheme by NCGTC. National Credit Guarantee Trustee Company. Perhaps this is the only housing loan scheme for which credit guarantee scheme coverage is available. So we already studied for this particular loan. This particular scheme, maximum loan that can be given is up to 35 lakhs, right? But housing loans under this scheme up to 20 lakhs with the carpet area up to 60 square meter, credit guarantee coverage is available. So this uh, cap you need to understand. That is, the sanctioned loan is up to 20 lakhs, and carpet area of the house is only up to 60 square meters, and the house should be the first house. It should not be a second house for the borrower. Then they are eligible for guarantee coverage under CRG FTLIH provided by NCGTC. Now, another important question that can be expected from this part is, who is the fintech partner for analyzing the credit debit turnover transactions in the account? That is, your we already saw, right? In the case of salaried class, the you need to calculate the average salary credit and that uh, business account turnover and all. See, we have onboarded a fintech partner for this purpose. It is known as ScoreMe Solutions India Private Limited. So they will analyze the bank statement and provide the credit debit turnover transactions in the account. So the one important question is, who is the fintech partner? onboarded by the bank for analyzing the credit debit turnover transaction in the account in the case of housing loan to customers with the minimal or nil income proof. It is Score Me Solutions India Private Limited. Okay. Now the another next thing is uh, Pradhan Mantri Vidya Lakshmi scheme. Uh, it is also introduced by the bank in this particular year, that is in 2025. So here also you need to uh, um, by heart or give much importance to this scheme. You should not have a confusion between Vidya Lakshmi portal and Vidya Lakshmi scheme. Both are different. Okay, this is a particular scheme under education loan. Vidya Lakshmi portal is applicable for all the education loans that are processed with our bank. So, okay, so this is a particular scheme introduced by central government for students, financing the students who are getting uh, admission to uh, quality higher educational institutions. The list of the quality higher education institutions will be identified by Ministry of Education and will be communicated from time to time. So the guidelines is there is no maximum ceiling amount ceiling for loan amount under this project. So the product. For students whose annual family income is up to 4.5 lakhs, they will be get a full interest subvention during moratorium period up to 10 lakhs for loans up to 10 lakhs. For students whose annual family income is between 4.5 and 8 lakhs, they will be eligible for 3% interest subvention during moratorium period for loans up to 10 lakhs. So what you need to understand is uh, student will be eligible for interest subvention for education loans up to 10 lakhs under this scheme. But if the annual income is up to 4.5 lakhs, they will get full interest subvention during the moratorium period. And if their family income is between 4.5 lakhs and 8 lakhs, they will be getting 3% interest subvention. Okay. So this is about interest subvention of Pradhan Mantri Vidya Lakshmi scheme. So under Pradhan Mantri Vidya Lakshmi scheme, the maximum income proof, I mean income, family income should be up to 8 lakhs for the interest subvention eligibility. Up to 8 lakhs. Okay. Now, loan amount up to 7.5 lakhs will be provided a 75% credit guarantee by the Government of India under FCG FSEL. That is Credit Guarantee Fund Scheme for Education Loan. That is the full form of CG FSEL. It is also administered by NCGTC. Okay. So just like our general government, education loan, where CGFSCL is coverage is available for loans up to 7.5 lakhs. Pradhan Mantri Vidya Lakshmi scheme is also entitled to get credit guarantee coverage, but only for loans up to 7.5 lakhs. Okay. And students admitted through management quota will not be eligible under this scheme. It is very important because what is management quota definition? If the student is getting direct admission to the course, they are known as management quota. If they are considered or securing admission through any selection process called entrance test or something, then it is a merit quota. Only merit quota selection will be eligible for consideration under this PM Vidya Lakshmi scheme. Otherwise, we can consider them under general education loan scheme with third party guarantee or collateral security based on the loan amount. Obtention of life insurance cover is mandatory for loan amount above 7.5 lakhs. This is also very important. Now, another important guideline with regard to this scheme is what is the margin? Okay, if the student is getting admission through to institution categorized as AAA, the margin is nil. If it is a AA or A category, up to 4 lakhs, it is nil. Above 4 lakhs, it is 5%. Okay, so the margin is also very important here. If it is a AAA category institution, the margin is nil. And if it is a AA category institution or A category institution, up to 4 lakhs, the margin is nil, and above 4 lakhs, it is 5%. So that's about PM Vidya Lakshmi scheme. For farmhouse, not land is no farmhouse NA land is required. See, farmhouse is not under Canara housing loan scheme. It is an agriculture property. Okay, that is entirely different product. Whether only 1 year income certificate is sufficient for house loan to agriculture or 3 years is required. In the case of housing loan to agriculture, is only the recent income certificate is required, not that 3 years income certificate is required. Only the latest. So this product is discontinued. Which product you are referring to? Not getting. If you are referring to housing loan agriculture scheme, it is still there. Okay. For housing loan to low income individuals, credits of only our bank or other banks also can be considered. General education loan will come under retail lending. It will be under retail lending only. Some places it is mentioned as construction to be started at 18 months. See, construction to be started, that is additional 6 months can be permitted by circle head. Usually, they should start the construction within 12 months. Additional 6 months can be permitted by circle head. Then that's why you have seen some places it is 18 months. So the maximum that can be permitted is 18 months, but the respective sanctioning authority, it is 12 months. Yeah, rooftop solar will be done. Uh, yeah, we'll be covering all those. Can repairs and relation to be. See, number of QHI is right now it is 902 latest. I don't know. The number can keep on increasing because at the time of introduction of this circular, it was some 800 or something. Now it is 902. Okay. Can repair and renovation loan to be given to 4 year build house? Yes, you can give. In case of education loan under Vidya Lakshmi, we have to open ASPA record for minor who is 17 years to get 7% interest rate. Yeah, in case where we have to credit the loan account as he cannot withdraw more than. See, it is like uh, the withdrawals in a particular month. Okay, that is the cap that has been provided. It should not be more than 10,000 in a month. Then you in that probably in that case you can credit it to guardian's account. Margin and collateral details for general housing loan. Yes. What is CGFSL in guarantee for Pradhan Mantri Vidya Lakshmi loan? That is the guarantee provided for loans up to 7.5 lakhs. That is, it is given by NCGTC. That is, suppose if that loan turns to NPA, bank will get 75 percentage of 7.5 as guarantee fee from the NCGTC. CGFSL and abbreviation is Credit Guarantee Fund Scheme for Education Loan. That is CGFSEL. Okay, we'll move on to this one because otherwise we'll be running short of time. So Canara Vehicle four-wheeler, two-wheeler, that are two very important topics. Salaried in the Canara Vehicle two-wheeler, it is and four-wheeler are very two important topics in terms of examination from a retail lending point of view. There are so many questions asked over the period of last 3-4 years. Okay. So we'll straight away move on to Canara Vehicle two-wheeler. Salaried class, minimum gross salary of 1.75 lakhs per annum and net take-home salary of 35% of gross salary. And in the case of non-salaried, the minimum annual income of 2 lakhs as evidenced by IT assessment order or ITR, income tax return. Okay. That means in the case of salaried class, their minimum gross salary should be 1.75 percentage per annum. And in the case of non-salaried, it will be 2 lakhs. And minimum invoice value of the vehicle should be for metro and urban, it is 1 lakh and above should be there for considering Canara vehicle two-wheeler. In the case of semi-urban, there is no minimum limit. Okay. And the margin, there are 4 different types of margin in terms of vehicle loan, Canara vehicle two-wheeler. This is very, very important. So you can just study in this order. That's why I have put it in this order. It always starts from salaried existing new and continues to non-salaried existing new. Starts from 15, salaried 15, salaried existing it is 15, salaried new 20, non-salaried existing 25, non-salaried new 35. So it is 15, 20, 25, 35. Just understand there is no 30 in between. It is 15, 20, 25, 30. Maximum repayment period not exceeding 60 months. So margin is, in the case of salaried existing, it is 15, salaried new 20, non-salaried existing 25, non-salaried new 35. Okay. So that was about Canara vehicle two-wheeler. And one important point is Canara vehicle under two-wheeler, you cannot finance used vehicle. Okay. Only in the case of Canara vehicle four-wheeler, you can finance used cars. Okay. Now Canara vehicle four-wheeler, salaried individuals with a minimum gross salary of 3 lakhs per annum, with a net take-home salary. That is it is not 5%, it is a mistake, it is 25% of the gross salary or 12,000 per month. This is not 5%, it is a typing mistake. Sorry for that. It is 25% of the gross salary or income or 12,000 per month, whichever is higher. And in the case of non-salaried class, the minimum gross annual income as per latest ITR, it should be 3 years, and average for last 3 years should be minimum 2.5 lakhs. Okay. And for pensioners, the NTH should be 50% in case of Canara vehicle four-wheeler. Okay. Now the margin is very important here. Up to 10 lakhs loan, the margin is 10% across all category of borrowers. That is central government, state government employees or other. It is 10%. But when it comes to loan amount between about 10 lakhs and up to 25 lakhs, it is 10% for central, state government, autonomous bodies or PSU employees. For all others, it is 15%. And above 25 lakhs, it is 20 across all the category of borrowers. So this is also very important margin, because for two-wheeler, we saw the margin is 15, 20, 25 and 30. Sorry, 35. But in the case of Canara four-wheeler, it is 10% for up to 10 lakhs. Only in the case of 10 lakhs to above 10 lakhs and 25 lakhs, it is margin is slightly varying. It is for central, state government and PSU employees, it is 10%. For all other customers, it is 15. And for if the loan is above 25 lakhs, it is 20% margin uniform. Now, coming to pre-owned cars, that is used car vehicle, used car loans. We already saw we can finance only for loan for Canara four-wheeler used cars. Okay. For two-wheeler, we cannot finance. And the quantum is defined as lowest of any of the three. That is 60% of the value of the vehicle as assessed by automobile engineer, 60% of the price agreed between the buyer and seller, or 60% of the original purchase price of the vehicle. Okay. So you need to see the minimum of these three 60% values. Okay. That is 60% of the value of the vehicle as appraised by automobile engineer. Please note that value evaluation need not be by any panel valuer. It can be any approved automobile engineer. Okay. And 60% of the price agreed between the seller and buyer, or 60% of the original purchase price of the vehicle. eh, What is the minimum you need to see? That is the loan amount with a maximum cap of 50 lakhs. This is very important. And a vehicle should not be older than more than 3 years. Okay. And the margin also is a little bit tricky here. It is very easy also if you by heart this table. It is, if it is up to 15 lakhs of loan amount, it is 40 percentage minimum margin. And if it is 30 lakhs, 15 lakhs to 30 lakhs, the minimum margin is 50 percentage, but the sanctioning authority is differing here, regional head CSE and above authorities. If it is above 30 lakhs to 50 lakhs, the margin is 50 percentage, which is to be permitted by circle head CSE and above. See, we have already seen the maximum loan that can be given is up to 50 lakhs, but above 50 lakhs also we can consider, but the sanctioning authority goes to EDCSE. That is, if the loan amount is above 50 lakhs to 5 crore, the margin is 50 percentage, but sanctioning authority is EDCSE. And if it is above 5 crore, margin is same 50 percentage, but the sanctioning authority is CSE to the board. So up to 15 lakhs only, the minimum margin is 40 percentage. For all the other categories, it is 50 percentage. Okay. Now, and then the repayment period is 60 months, and with vehicles which are not not older than 1 month from the date of their first purchase or first registration, that is registered within 1 month, it can be treated as a new vehicle. Okay, it need not be considered as a pre-owned car. This type of cars will come into picture if the borrower is purchasing a sharing it is disabled. Yeah. Am I audible?
You're audible, sir.
Okay, thank you. Sorry, it was I think the screen is now visible. Okay.
Yes,
Now,
sir.
the payment to vehicle loan dealers as incentive is 1.3% of loan amount with a maximum of 1 lakh. And 1,500 for the dealer executive. Okay. Time norms we have already discussed, and a report from anyone CIC for loans up to 5 lakhs of Canara vehicle. And the time norms is up to 7 days for branch or RH sanctions. If it is at a circle level, the time norms is 15 days for vehicle loan sanction, 2 to 3 weeks for HO sanctions. Now, this is another new product, Canara Green Wheels. Not so new. It was introduced some 3 4 years back. So the purpose of this scheme is to finance the EV cars. Okay. Income criteria is same as that of salaried class. Only in the case of salaried class, it is 3 lakhs per annum. Non-salaried class or agriculturist, net annual income should be minimum 4 lakhs. Okay. But in general, it was 3 lakhs with an average of 2.5 lakhs. But here it is 4 lakhs. Margin is up to 25 lakhs, it is 15 percentage. Above 25 lakhs, it is 25 percentage. This is very important because you may get confused between the margins. So you have to have a fair idea about the margins of all these three products. That is Canara vehicle to two-wheeler, four-wheeler, and four-wheeler. This one used cars and Canara green wheels. Okay. So margin is up to 25 lakhs, it is 15 percentage, and above 25 lakhs, it is 25 percentage. Rate of interest, we need not a guarantor also. Maximum repayment is 84 months, just similar to that of general vehicle loan. Now, vehicle loan to agriculturist. This is also one of the popular products of the bank. As we have seen, it is similar to our housing loan to agriculture scheme with only slightly one difference. That is, in the case of housing loan to agriculturist, the minimum gross salary, minimum gross annual income was 5 lakhs. In the case of agriculturist engaged in dairy farming, poultry farming, plantation crops, and horticulture, it was 5 lakhs. Here it is 4 lakhs. Okay. Earlier, on the land holding is similar, same. It is 5 acres of irrigated land and 10 acres of dry land. But if the agriculturist is engaged in dairy farming or poultry farming or plantation crops or horticulture produce, the minimum land holding levels need not be applied. There, the minimum gross annual income is 4 lakhs in case of Canara vehicle to agriculturist, 5 lakhs in case of uh, uh, housing loan to agriculturist. Okay. ITR is not mandatory for loans up to 10 lakhs. Uh, for above 10 lakhs, ITR is mandatory, but ITR waiver can be obtained for uh, uh, loans above 10 lakhs. Now, I request you to please have a look on this one, two, three. Fourth point. That is, in case of loans above 10 lakhs, ITR is to be compulsorily insisted upon where agricultural income is also declared. If the same is not available, prior clearance from ROH CAC is to be obtained. This particular guideline has been changed from this year onwards. This slide I have prepared last year, but forgot to change this point. So please note it. This particular guideline is changed. That is, now instead of ROH CAC, now RH head can provide uh, loans above 10 lakhs without ITR. Okay, prior clearance is not required, but waiver, the RH head is now permitted. Okay. But prior clearance from ROH CSC is to be obtained. Now, net take home salary, net take home income is 40 percentage of gross annual income. But in the case of this one second, let me just. Okay. And NTH in the case of Canara Vehicle, normal scheme was 25 percentage, 10,000. Sorry, 12,000. Here it is 40 percentage, 1.5 lakhs. Okay. But CGM circle head can permit relaxation up to 25 percentage with 1 lakh of NTH. So basically, the changes here is uh, the land holding is 5 acres for irrigated land and 10 acres of dry land, and the annual income is 4 lakh. ITR is not mandatory for 10 lakhs. All the other guidelines, that is margin, repayment period, are same as that of Canara Vehicle four wheeler. And in net take home for the general scheme, it was 25 percentage, 12,000. Here it is 40 percentage, 1.5 lakhs. Okay, relaxation can be permitted up to 25 percentage, 1 lakh by circle head and above authorities. And here the margin in terms of existing and new customers, there is a slight change. That is up to 10 lakhs. It is a margin for existing customers is 10 percentage. Above 10 and 25 lakhs, it is 15 percentage. Above 25 lakhs is 20 percentage. This particular part is same as that of our uh, normal scheme, but this is changing. Okay, that is for new customers, it is 20 percentage, 25 percentage, and 30 percentage. This part also you need to mug up. And the accessories that can be financed, it is limited up to 25,000 H. It is same across both the Canara Vehicle to agriculture standard general scheme. Okay. Now, Canara Mortgage, this also is a important scheme because there are two changes that has happened during this financial year, this 2025 year with regard to NTH. So you can expect a question from Canara Mortgage in any of the cadres of examination, because earlier the NTH was different from this NTH that I have mentioned here. So, since there is a change in the NTH guidelines introduced this year, you can expect a question here. So, Canara Mortgage is a retail lending non-priority product given to salaried and non-salaried class up to 50 percentage of value of the property. The loan quantum is 96 times of monthly salary or 8 times average of last 3 years in terms of non-salaried class. NTH is 30 percentage or 25 percentage. Okay, that is in case of salaried class. So in case of salaried class, it is 30 percentage or 25 percentage. In the case of non-salaried class, it is suppose if it is medium or high CRG grade, 7 times only we can provide. In that case, the minimum NTH is 35 percentage or 30 percentage. Sorry, 30,000 of NTH should be there. So here the change that is there is in terms of NTH. Earlier the NTH was 35 percentage and 30,000. Now it has been reduced to 30 percentage and 25 percentage in terms of salaried class and non-salaried class with a medium or high CRG rate. That is the maximum loan that we can give is 7 times. There the minimum NTH should be 35 percentage and 30,000. Okay. So that is the change in NTH in terms of Canara Mortgage. Now, Canara Mortgage proposals up to 7.5 crore will be processed by retail asset wing, and beyond 7.5 crore, it will be processed by the respective corporate credit wings at head office, that is MCCW or LCCW, as the case may be. So this was about the major schemes that is in retail lending. We have not covered here. It is Canara budget and Canara site loans, Canara cash. Those schemes which are less important, because with the available time frame, we will not be able to cover those schemes. Okay, that's why we have not uh, covered those things. Okay. Two-wheeler loan, who are the in the case of two-wheeler electric, two-wheeler can be financed. Yes, in the case of two-wheeler loan, electric two-wheeler loans can be uh, financed. You mentioned CRE RH, we should arrive at multi based on number of allotments in different house, which has only one house number, but has 2 to 3 units which are let out. Then how should be treated? Yeah. See, it is let out means there also it is based on the housing this door numbers only. Okay, as long as the door number is only one, you need to consider it as a normal housing loan only. Okay, because the tax, I mean, the owner will be paying the assessment tax for one house only. So even if the other portion is given as let out, we need not consider. Okay. Canara mortgage NTH based on risk rating. Yeah, I will share that again. Let me just go through it once more. Margin and collateral details for general education loan. Yeah, general education loans, actually, if it is merit based education loan, up to 7.5 lakhs nil margin, and there is no securities to be obtained, because up to 7.5 lakhs merit based CGFSEL coverage will be there. Up to 4 lakhs, if it is management quota, up to 4 lakhs, you need to have 50% of collateral or third party guarantee. If it is above 4 lakhs, 100% collateral should be obtained. Can we consider HL for recently completed construction? No, recently completed construction, you cannot go for HL for any repairs or renovation or this one, because it will be treated as a reimbursement, because housing loan for reimbursement was discontinued in 2024. PMAY scheme, PMAY scheme, I wanted to include that one, but due to time constraint, I couldn't. This one, it's a little bit lengthy because it will keep on growing. I will share the PPT for that. Okay. Moratorium starts from first disbursement date or sanction date. It is always from first disbursement date, not from the sanction date. Without collateral, how much loan for a general education loan? Without collateral, you can give up to 7.5 lakhs in the case of merit based selection, or up to 4 lakhs by taking a third party guarantee, you can give in the case of management quota. Maximum is for 50 lakhs. Yeah, used car, it is 50 lakhs, but above 50 lakhs, if you need to consider, it will go to EDCSC and the CSD of the board. If the customer purchased two consecutive houses, sold both of them, now he approaches for fresh housing loan. Will be considered under CRE? No. It is about the number of houses in his name at the time of financing. Can we give HL plus 2 Kutir loan? HL plus 2 Kutir loan is actually a debatable topic, because in the case of Kutir loan, uh, normally there is no restriction provided anywhere. But in the case of Kutir loan, up to the NTH percentage is always 60 percentage. No, so if we give Canara home loan plus them to them, the NTH will be always get affected. So practically, no Kutir loan, I mean no home loan plus can be given for HL Kutir loan. Agri farmhouse, somebody is keep on asking. See, agri farmhouse is not under the purview of this one, so I'm not aware of the scheme guidelines also. Farmhouse is not a retail lending product. I think during your agri class, you can raise this doubt. Okay. This I will be sharing with CBOA. You can get it from Canara mortgage applicant status as NPA as guarantor can be financed, close NPA account amount. It all depends upon the CRG rating. Okay. It is based on CRG rating. If the CRG rating, based on the CRG rating only, you need to decide the sanctioning authority. Yeah, rooftop solar, Canara rooftop solar, I will just take. What Canara mortgage explained. Okay, Canara mortgage is a personal loan given to salaried class or non-salaried class uh, based on the value of the property and his income criteria. Okay, it will be like suppose if you have a land, I mean residential or commercial property with the land and building of say 100 lakhs, you can finance up to 50 lakhs. It is based on the market value of the property. It is a personal loan type of product. If one person took three housing loans in past and closed at different times while in selling also, now he's coming for fresh loan, then how it will be classified, whether normal HL or CRE. See, that's what. It is always in terms of now how many homes or houses are there in his name at the time of financing. Okay, so normally this kind of scenario comes in the case of contractors. Like there will be contractors who keep on constructing houses. They will sell, then comes to us for housing loan. And those customers, as per guidelines, it is like general housing loan only. Suppose if it is is only the second housing loan, I mean second unit, but you should treat these customers with caution only because it is not for their own purpose. It is for a selling purpose. They are taking the housing loan. So technically, they are not commercial real estate. It is the normal housing loan only because at present there is only two housing loan in their name. I mean, two houses in their name. Whether number of units related to number of kitchens? No, number of units is not related to number of kitchens. It is related to door numbers. Residual life for general housing loan 5 years more than repayment and for ready built 10 years. No, it is like always the residual life should be 10 years more than the repayment end date. There is no 5 year concept. Suppose if the residual life of the housing loan housing unit is 30 years, you can give only 20 years of repayment. So Canara rooftop solar, there are two components to it. That is up to 3 kilowatt and above 3 kilowatt to 10 kilowatt. Okay. So we are first discussing about up to 3 kilowatt. That is CRTS up to 3 kilowatt. Up to 3 kilowatt, the maximum loan quantum is 2 lakhs including subsidy up to 3 kilowatt, and maximum 6 lakhs including subsidy for above 3 kilowatt to 10 kilowatt. See that 3 kilowatt, 10 kilowatt is the capacity of the rooftop solar. Okay. For a normal household, 3 kilowatt is sufficient. So for that, the maximum loan quantum is 2 lakhs. And if it is 3 to 10 lakhs, the maximum loan quantum is 6 lakhs. Subsidy is rupees 30,000 per kilowatt for 2 kilowatt rooftop systems, and additional subsidy of 10,000, 18,000 for per kilowatt for 2 kilowatt to up to 3 kilowatt system. So in any case, the maximum subsidy will be capped at 78,000. So that's the concept. It is like per kilowatt, the subsidy is 30,000 for 2 kilowatt. That means they will get a maximum subsidy of, say, suppose if a customer is installing a 2 kilowatt rooftop system, they will be eligible for subsidy of 60,000. Okay. And in the case of 3 kilowatt, that is between 2 kilowatt and 3 kilowatt, another additional subsidy of 18,000 they will be getting. But the maximum subsidy will be capped at 78,000. Margin will be 10%. Minimum annual income criteria, there is nothing. NTH is nothing. This is, we are telling about up to 3 kilowatt. Okay. Don't confuse, because for 3 to 10 kilowatts, there is a income criteria and NTH criteria coming. Okay. Up to 3 kilowatt, there is a margin is 10%. Minimum annual NTH criteria is not there. Entry age, exit age is, entry age is 18 years and maximum entry age is 75 years. Wherever the age of the applicant is beyond 65 years, loans shall be sanctioned along with the co-obligation of legal heir aged below 60 years. Okay. Repayment period maximum 10 years. But the repayment should not go beyond 75 years at the end of repayment tenor. Okay. That means if the loan is sanctioned at the age of 70 years, then maximum repayment that we can give is only 5 years, and the CIBIL score should be 680 and above. In that case, it can be given by a branch head. The loan can be given by branch head. And if the loan is to be given to our employees or ex-employees, the sanctioning authority is RO head. Because this was a change, there was a change in this guideline. Because at the time when Canara rooftop solar was introduced, the sanctioning powers was given to DM RO head. Okay, but it was slightly changed. That is, if the CIBIL score was 680 and above, the loan was the sanctioning authority was changed to branch head. Okay. And if the ex-employees or our employees is coming for this loan, sanctioning authority is RO head. Now, upfront disbursement to the vendors shall be made to the extent of 70% of project cost, including margin money of 10% to be contributed by the customers, and remaining 30% will be disbursed within 30 days of installation. That means first you can disburse up to 70% of the project cost only to the vendor for start installation, and the remaining 30% will be disbursed within 30 days of satisfactory installation and post installation verification by the bank. And now coming to 3 kilowatt to 10 kilowatt, the maximum loan amount is up to 6 lakhs. The income criteria is minimum annual income should be 3 lakhs. For up to 3 kilowatt, there was no minimum annual income criteria. And for NTH, there was no criteria for up to 3 lakh. Now, applicant should have a minimum monthly net take home of 25% of their gross salary or 10,000, whichever is higher. Subsidy support is maximum 78,000, the cap. Branches not empowered to reject any proposals originated to Jan Samarth portal, because all the PM Surya Ghar Yojana, that is Canara rooftop solar proposals, are to be routed through Jan Samarth portal. So, in any proposal that is not Canara rooftop solar proposal itself, any proposal that is generated from Jan Samarth portal needs to be rejected only by next year authority and all. So that is about Canara rooftop solar. It is very simple product only, but the NTH and entry age, those things, subsidy support are a little bit tricky when compared to others. Vehicle loan business entity will come in whose powers? Aggregate limit will be applied or not? Okay, vehicle loan to business entity, it is under residual, I mean, respective sanctioning authority only. You need not club it with the MSME exposure. Okay, that is like you need not suppose if the customer is having an uh, the customer is having an MSME loan of 10 lakhs and you are required to give a Canara vehicle of say 5 lakhs, you need not consider that 10 lakhs plus 5 lakhs. Okay, it is like residual, I mean, aggregation of liabilities need not be done for two different sectors, retail lending and MSME. Under CRTS 3 kilowatt to 12 kilowatt, what maximum loan can be given? It is 6 lakhs. Is there any concept of electric bill in solar roof? Oh, I'm not sure. Under Canara name, vehicle respective can sanction to 25 lakhs. Cooling period for retail lending loan. Cooling period we have already discussed. It is on the basis of the extent of sacrifice. Okay, up to 10 percentage. It was uh, uh, 24 months, and 10 to 25. It is 36 months. Above 25 percentage, it is 60 months. Like that, we have given. No income considering means up to 3 kilowatt income criteria is not there. CRTA, what are the documents we have to collect from the customer? See, if you keep on going like very in details, see, from an examination point of view, we need not study about what are the documents we need to get from the customer and all. Like, um so if you want to, from a knowledge perspective, yeah, electricity bill should be in the name of landlord. Yeah, it is like uh, suppose if the Canara rooftop solar is given to the uh, borrower, he should be having the electricity bill in his name, and house tax paid receipt also should be there in his name. Is there any other questions you people are having? Then otherwise, we will have a 10 minutes doubt clearing session up to 1 o'clock. 1 o'clock, I think we can find. Sale deed must or should not required for sale deed and all. It is not required. Only thing is the we need to get the property tax paid receipt to ascertain that the house is really in his name. Sale deed is not mandated. Disilio sir, can we wind up at 1 o'clock? Is it fine?
Yes, sir. I can do it,
Yeah.
sir.
Yeah. PMAY, I will share the this one questionnaire I will prepare and give. Okay. Whether CREHL is considered upon number of kitchen in Karnataka. See, irrespective of the state you are in, it is always a debatable thing. Some in some RHS or some inspectors are pointing it out on the basis of number of kitchens. Actually, number of kitchens technically is not a criteria for the number of housing loan units, because always the LSG, that is the local self government, assess the number of units on the basis of door numbers. So we, as bankers, also we are required to follow that um, guideline only, because bankers are not the competent authority to assess the number of units. Okay, number of units is always, it is always to be considered, or it is to be assessed by the local self government or the authority who is assessing or approving the building. So if they feel that this is a 2 unit house, they will allow 2 door numbers. Then we should also treat them as 2 house numbers. Bankers are in no way the competent authority to assess the number of houses, dwelling units. It is always up to the local self government authorities to do that. Door number is only one, but kitchen is more. Every floor, one kitchen. Yeah. See, it is up to the owner to have how many kitchens. If suppose if we uh, uh, say in one flat, say, or one unit, how he has constructed 2 kitchen in the same floor. Okay, it is not a two dwelling unit. Okay, it is not about. That's why the concept of kitchen is not the proper idea to count the number of dwelling units. And as I already told, bankers, as bankers, we are not the competent authority to do so. We are, we have to always rely upon the local self-government authorities to consider the number of units. If already housing loan customer NTH calculation, please explain non-salaried. No, see, in the case of rooftop solar, there is no distinction between non-salaried and salaried. In general, what is life years of building? Okay. See, regarding life of the building, for in terms of housing loan, I will explain you one thing. See, if the uh, loan or the age of the building is above 20 years, okay, DM of the RH has to visit the property for as part of site inspection. And if the age of the building is above 40 years, the loan has to be sanctioned by circle head and above authorities. Okay. So the thing is, with regard to how age of the building, the valuation report will be having two aspects. What is the age of the building and the residual age of the building? So, in terms of age of the building, you need to see who is the authority to inspect the property and who is the sanctioning authority. In terms of residual age of the building, you need to ascertain what is the repayment period. Which of Canara mortgage, please one time explain. Yeah, I will just take it. See, I will explain the Canara Mortgage NTH one more time for the sake of all. See, you have to see it is like it is like this. Normal grade customers, that is low or normal CRG grade customers, the loan quantum is 96 times in terms of salaried class and 8 times in terms of non-salaried class. In both these categories, the NTH should be 30 percentage or 25 percentage is the NTH that is required. Okay. Now, if you are considering salaried class or non-salaried class of medium or high CRG grade, then the maximum loan quantum that you can consider is only 84 times or 7 times, as against 96 times and 8 times. Okay. And in those case, the minimum NTH should be 35 percentage or 30,000. So you can learn like this. In the case of low and normal CRG grade, the NTH is 30 percentage or 25,000. In the case of medium or high CRG, the NTH is 35 percentage or 30,000. I think it is fine right now. So any other questions is. If already HL customer, NTH calculation, non-salaried for rooftops. I told for non-salaried, there is no distinction between salaried and non-salaried for rooftop solar. And suppose if the customer already having HL, the NTH, it is like for rooftop solar, they should, if it is up to 3 kilowatt, there is no separate NTH guidelines is there. Okay. And bank has already also not mentioned anything about whether the existing housing loan, this thing needs to be considered or not. Okay. Yeah. PPT I will be sharing with De Silva sir. He will be sharing to the group. Uh, or if required, I will share in this chat itself. Sir, De Silva sir, is it fine if I share the PPT to you?
Yes, sir. We will be anyway sharing in the group only, sir.
Okay. Okay.
Okay, sir.
PMFME is an agriculture product, so it does not uh, come under retail lending. Yeah, the corrections will be made before sharing. Square feet for CRTS, how many square feet? There is nothing called a square feet for CRTS. It is always based on the uh, kilowatt of the unit. I mean, the solar plant. Canara mortgage repayment. Okay, Canara mortgage repayment is a maximum 15 years repayment we can give. 10 years repayment can be provided permitted by RAH head. 12 years repayment can be permitted by RO head, and up to 15 years repayment can be permitted by circle head and above authorities. So in any case, the repayment period should not go beyond 15 years. 10 years for RH head, 12 years for RO head, 15 years for circle head. Tell retail Uday campaign targets for branches. No, yeah, it won't be asked in the questions. Repayment period for Canara mortgage you are asking. It is Canara mortgage 10 years. 10 years for can be permitted by DM of RH, 12 years by RO head, and 15 years by circle head and above authorities. So the maximum repayment period, if it is asked, it is 15 years. But the sanctioning authority will be different. See, once again, I am telling uh, personal loans for HEFA and others. So that's what the Canara budget, those things, so CRT is 75% on, it is including the margin, including the subsidy, we are telling 70% of disbursement. And one more thing I am going to tell is like, see, you need not mug up the interest rate that uh, processing charges, sanctioning authority details, like in terms of amount. Okay, only in terms of this peculiar sanctioning authority. Say, suppose if the loan quantum is, suppose the repayment period is 15 years, it is to be permitted by those kind of sanctioning authority only you need to study. Other than that, you need not study what is the sanctioning powers for senior manager, RH, like that. You need not study, but it is a waste of time because maximum. I have not seen much questions about that with regard to those topics. So I mean, rate of interest, processing charges, those things you can very well ignore. Canara Heal new changes. Canara Heal new change that I already discussed. It. Now, terminal illness is included as part of Canara Heal, and that 15 days period UPI credit period has been introduced, and the cooling period for 24 hours for iOS users and 72 hours for for 24 hours for Android users and 72 hours for uh, iOS users has been introduced. The main change is that it has been introduced for customers with a terminal illness. So I think we can wind off the class because even if we keep on going, no, that fatigue will affect every one of you. So uh, I wish everyone a very uh, yeah, you have to fight with the RO. So I wish everyone all success in the examination as well as in all your professional life also. I thank CBOA for giving me the opportunity in conducting this class. I'll be happily taking up classes whenever the opportunity is given to me. So, to all the participants, prepare well, aim for the first rank. Wish you all the very best. Don't get disheartened if things don't go uh, in your way. You do your best, and rest is in give it in the fate. You do all the preparations by your own to the maximum possible extent. And one more thing is, don't take it uh, as a examination point of thing also. This learning, you do it as part of your professional life also, because it will be useful in your day-to-day activities also. Okay, so once again, I thank you, CBOA, for giving me the opportunity, and wish you all the very best for all the participants who are taking up the promotion exams this time. Wish you all success. Thank you. Thank you, Disilva sir.
Sir, thank you so much, sir, for your insightful and detailed session, sir. And we are happy to have us, sir, for your valuable time and guidance also. We'll sign off, sir. Thank you, sir.
Thank you.
Thank you, sir.